Hello, everyone. Good evening to you all, and I'm welcoming you to another promising session as I will be taking you through my thought process on what my expectation is going to be like on the XAU for the new week. Well, it's quite obvious that the gold appeared to have hit a 1 month high as price action closed just right above the 1,860 level, with signs that we might be seeing some bullish momentum in the new week. And since this is going to be a follow up detail to my previous analysis, I would like to share with you some key moments that we had during the course of last week's trading session. As the first half of last week was, we had some selling opportunities as price action was initially bearish during the beginning of the week, and going closer to the later part of the week, we begin to see some bullish momentum springing out of that 1,820 $1,800 area, which price action has been trapped in the last 4 weeks. Now, at the beginning of the week, last week, we initially had this simple flat channel which emphasized the indecision in that market as price action was trading around the 1,857 level and the 1,850. And you know what we look out for whenever we have this kind of flat channel is to remain patient for price action to either break out for buying opportunity or a breakdown of the channel for selling opportunity. So with our orders placed at both ends, we had our sell stop order triggered below the 1,850. And so this was when the first move started this last week. We saw the bearish move, and price action continued to drop to the downside. Here we saw a retest of structure, and boom, price action continued to go to the downside here. And at the end of this bearish momentum, we were able to scoop over 4,500 pips in profit as we had two positions running in that regard. Then another breakdown of the $1,820 level welcome an additional position on that one too as well as we rode the move all the way down. But at the morning of on the match on the 8th of March, we started seeing some consolidation phase happen, which was characterized by some bullish momentum. We saw some attempt by the buyers to break out of that structure. And as a result of the situation here, during my live studio session that morning, I shared a simple setup on the 15 minutes time frame where we were anticipating a breakout of the 1,815. And if a breakdown of the 1,813 happens, we will definitely be selling. Now, look at what happened here. We had our buy stop order triggered above the 1,815, and price action continued to move to the upside. And this was the first phase of that bullish momentum during the later part of last week. And we started seeing another consolidation phase here. I shared this on the 9th. As we saw bullish momentum continue, we anticipated the breakout of the 1,820 for another opportunity to add more position to our existing trade. And this was exactly what happened. Price action continued to move to the upside. In fact, it was quite a profitable situation for us on the XAUUSD. And if you do want to have a one-on-one examination of how we took advantage of these opportunities last week, I will be sharing the link in the description box below. And if you are watching from my YouTube channel, you will be seeing the link directing you to these commentaries at the top right hand side of your screen. So this was how we ended last week, and it was a very, very profitable one. So now that we are heading into the new week, what is our expectation and what are we going to be looking out for on the XAU USD? Well, since this is going to be a follow-up detail, I will be diving right into the current structure. And if you do want to see how we get to this point, I will be linking you to that video in the comment section. And if you are watching on from my YouTube channel, you will be seeing at the top right hand side of your screen. So now with the situation we have on the daily time frame here, it is quite obvious that price action has been bullish in the last 4 to 5 months now, as we saw the bullish momentum began in the month of October. And since then, price action has continued to find higher highs and higher lows. And to further emphasize the strength of the bias in this particular market, I had a couple of bullish trend line which was identified here. As you can see, I had a temporary one here, which price action had been respecting for quite a while. And I also have the major bullish trend line here, which sits around this area. And it's very obvious that price action has been bullish. And if we look at what has been happening in this current market since the beginning of this year, you will see how the bullish momentum did a final breakout of the 1800, 1820 zone level to push price to the upside. Remember last week when we were following up with this commodity, we saw how the 1800, 1820 level was a strong selling niche in this market throughout the second half of last year. And with a final breakout of that structure here at the beginning of the year, it was a beautiful signal that we might be having a huge momentum to the upside. Now, as soon as price tested the 1950 level, what did we see? We saw a huge crash. We started in the month of February. So, since the beginning of the month of February, we saw a huge crash to the downside, which appeared to be a retracement phase at this particular point in time. And this will definitely be a reflection of profit taking activities as those who are taking advantage of this bullish momentum around the $1,820 level did some selling to make some profit off what they have made so far. And I think that was the result of this retracement phase back into that zone. And if you look at what has been happening in this current market in the last 4 to 5 weeks now, you can see that price action is back into the 1800, 1820 zone, a level, an area where price action started this year. And you all know what we look out for from a technical standpoint. Whenever price action breaks out a significant structure like this, there is a tendency that price will come back, do a retest of that structure in anticipation of another wave of bullish momentum. And with the situation of things here and looking at what has been happening here in the last 4 to 5 weeks, you will see that we're beginning to see some bullish momentum begin at around the zone, which also shares a beautiful confluence with that major bullish trend line that I identified earlier. And the last week's trading session, we saw our price close somewhere a little bit right above that important key level at the 1860. Now, going into the new week, the 1860 level is going to be a yardstick for our trading activity. And what do I mean by that? So, the beginning of the week, we want to see what is going to be happening around the 1860 to determine if we are going to be buying or selling. Are we going to be seeing some selling pressure resume to incite another wave to the downside? Or are we going to be seeing price action do a breakout of the 1860 in anticipation of the beginning of another wave of bullish momentum to the upside? So these are the things we are going to be looking at. But in order to have a better perspective into what is really going on here, it is very important that we scale down to a much more lower time frame where we begin to see things more clearly. But before I scale down into the 4 hours time frame where I have identified a simple setup which we shall definitely be using to guide our trading activity for this week, I want us to quickly run through the economic calendar as we need to see what to be expecting during the new week. And you all know that despite the technical understanding of the price action on the chart, we need some liquidity in the market to drive price movement, and this will only favor us if we have some liquidity, some trading volume in the market. So, in that regard, we want to be looking at the catalyst that will be driving some liquidity in this market, and we shall be focusing on events that will be affecting the US dollar. So for the new week, we have the first major event coming up on Tuesday, that's March 14th, and that is the Consumer Price Index here. And we have for the month on month and for the year on year. And for the month on month, we can see that the previous data came in at 0.4%. So there is a consensus of 0.4% too as well. So we want to see if this is going to be as expected or beyond expectation. Then for this one here, we have the 5.6% previous data, and we're expecting a 5.5. So let's see what is really going to be happening in that regard. Then fast forward into the future, we have something on Wednesday too as well. That is the retail sales also. And then the last one is coming in on Friday. That is the Michigan Consumer Sentiment Index, which is also a significant event we want to be looking forward to. And definitely, we all know that participants in this market will be anticipating this event, and we shall definitely be seeing the reflection of this anticipation on the chart as price action. So, with this information we have gathered here, let's scale back down into the 4 hours time frame where I was able to identify a simple setup which we shall be using to guide trading activity for the week. Now, if we look at the 4 hours time frame closely, the first thing you would observe here is that price action has actually been bearish. And throughout the month of February, we saw our price action continue to find and lower lows and higher lows and lower highs. Now, as a result of this, and to further emphasize the strength of the sellers in this market, we have this beautiful descending channel which buttresses the fact that sellers has actually been in charge in this market. But something interesting happened during the second half of the month of February, which appeared to be revealing some thinning out in momentum for the sellers. And if we look at this closely, it appears that price action has evolved or transitioned into something that looks more like a reversal pattern. So if we take into consideration this impulsive move into the downside, we saw that as soon as price got into the 1,800 level, we started seeing buy pressure resume, hereby negating all attempt by the sellers to break down that structure. And look at what happened. The first touch of the 1,800 price action came back into that key level we identified on the daily time frame at the 1,860. We saw the second touch as price action was unable to break the previous low. And look at what we have here. It appears that we have a strong reversal pattern in the form of a double bottom structure. And you all know what we look out for whenever we have identified a reversal pattern. We need a neckline area that we shall be using to guide trading activity. And as a result of this, we can see how the neckline area coincidentally shares a beautiful confluence with that 1,860 level that we identified on the daily time frame. Now, the question right now is this. Look at what happened on Friday. We saw a little breakout of that structure, the 1,860. And for this reversal pattern to be mature, we need price action to do a breakout of that neckline, probably a retest of structure to give us a confirmation that price action is actually going bullish. And looking at the breakout of that neckline at the 1,860, you can see that price action appeared to be right around the resistant line of that descending channel. So you will agree with me that we are at a critical point in this market right now, as we need some further confirmation to give us a clue that the bullish momentum is likely valid. Now, with this kind of situation here, we might likely be looking forward to another breakout of the resistant line to give us that further confirmation, and probably a retest of structure on our lower time frame will definitely be welcoming additional position in that regard. However, if price action continue to find selling pressure around this area, probably retest of structure, rejection on our lower time frame, it might likely be evolve into a situation where price action will be respecting the trend line one more time to send price crashing to the downside. But I doubt if that is going to be happening. But whatever the case may be around this area, be rest assured that I will be jumping right in the comment section to give you an update on what my expectations are after monitoring how participants in this market will be reacting to this current structure during the early hours of the new week. I hope this video has been of immense help in making your personal decision on the XAUUSD for this week, and if it did, kindly support this project by clicking the like button. You would also want to follow me on my TradingView platform at Dark Sherry, spelled DARCSHERRY, so that you can be part of the daily commentaries I normally share in the comment section of all of my videos. Thank you for watching this video, and I look forward to seeing you right in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.